All right, let's jump in. We're live. I've got the recorder going and got a few things I want to cover. So this is it gets confusing because originally I said, let's make Tuesdays and Thursdays the live sessions, and then let's make Wednesdays and Fridays the makeup sessions. But really, what's happening is information is kind of flowing in all days, and I think that's okay because I'm finding it's healthier to post trades as they come up, as opposed to the scramble I had been doing, try to get trades ready for Tuesday, and then try to get more trades ready for Thursday. And as you know, forcing trades is just not a good idea. And so it's just for me working out better, just the last few days, posting them as they come up, and then talking about whatever's the pertinent topic during, whether it's Tuesday, Wednesday, Thursday, Friday, knowing that at any given time we never really have more than about 30 to 40% of you guys on any given call. And I expected that, so that's why I'm trying to be much more intentional about recording and posting these recordings, because I would say this session I'm definitely going to reveal some educational information that wasn't revealed yesterday. And now I'll probably cover it again tomorrow, which I know that can be frustrating if you've already heard it. But then again, I hear often that you guys don't mind the repetition, that it's actually good for you. So I want to start off by showing you two different processes that I go through in picking trades, and I think it'll help on a few different notes. So first of all, I've shown you this before. I put the trade ideas into a folder. So this is the September trade ideas. And so you can see there's a lot of different trades. And then I've got some like this guy who I subscribe to that I really should cancel. I mean, just for fun, let's open up his trade recommendation. I still like to track them to see. Um, I mean, this one's got a win of $10 if you get it right, and the break even was 252.90 when the stock was trading at 259. Oh, that's not bad. Actually, he built in a decent amount of room. But in doing so, there's just not a big win here. Granted, you could do 10 contracts, which I suppose is not a bad idea, but I do track lots of different people, and as I said before, I like to think that that's part of what you're paying for is my budget, which very candidly, and I know you already get this, comes a lot from what you guys are contributing, because some of the stuff would be really overkill for me to do on my own. But I, since I have some revenue coming in from you guys, I feel sort of compelled to invest it in all the logical services that I think make sense. And it's funny, the more I subscribe to a lot of them, the less I realize they even make sense. Um, Here's one yesterday I got from this company. Um, this was on the QQQ, and this one had a max gain of 35 and a max loss of 65, and that wasn't too bad. But what concerned me was the break even was 185.65 when the stock was 186.65. So there wasn't a lot of room for this thing to fail, and yet there was a lot of time. And the QQQ, like the SPY, these are huge baskets of stocks. Look at the volume. It's 28 million shares. It's and the bid and ask is just incredible. So we are going to be doing more of those trades now that summer's over, and I wanted to talk about that too. Um, but first, let me talk about this. So I gather up, as much intel as I can, and then I do a lot of my own research, and then I watch them. I watch them for a day or two, and it's there are times where I think one looks like a decent trade, but I'm not 100% on it. So I'll just watch it for a day or two and see if the trend heats up or not. Now we do miss some. We get in late on some of those, but it's sometimes better than jumping in early and getting whipsawed. So I do that, and then I go back and I look at various things to try to see if it makes sense. And so I've got one up here on my screen, and I'll just kind of tell you the thought process that I've gone through, and why this one is not one I'll recommend, at least not now. Um, so we haven't talked about volume much, and I've intentionally left volume off as an indicator because summer is the worst time to trade options. It's not that it's a bad time; it's just the worst time, compared to the other times. And the reason is they call it the summer doldrums. A lot of traders take vacations. People just aren't working as hard. People aren't as motivated, and volume is often much lower, and volatility is often much lower. And those two things together make it A, harder to pick a trade because you don't get a lot of volume confirmation, and B, what's B? I forgot what B was. Anyway, so oh, sorry. And then the volatility makes when it's low, options are too cheap. We wanna sell options when volatility is very very high. We get in that way, and then as volatility drops, the option value drops. Which if we sold short, that's exactly what we want to have happen. And most of the time, we're a net seller of options. Okay, so I wanted to share that with you. So here's an example of a trade that looked okay over the weekend, and it's just not looking that good to me now. And the reason is, yeah, it's still down. The red is still below the blue. It has dropped 66 cents since I picked it out as a trade. So in that sense, I was right. Had we jumped in this yesterday, we'd be in the money right now. We have good confirmation on our MACD, which is good. But what's bad is we have a divergence between the MACD, which is falling, and the money flow, which is rising. This is not good. Something's going to give here. Either the money flow is going to swing back down, and if it does, that's great. That's a great entry point. Or the MACD is going to turn positive on us. Second, when we look at the RSI, when I looked at this, hmm, I guess it was low when I first started looking at it. I know. Sorry. I was looking for the RSI to come out of the oversold category. So, jumping into a bearish trade that's already oversold with money flowing into it, that's not a great trade to jump into. Lastly, and probably most important for this example, is the volume is just not climbing, meaning there's just no conviction behind the sellers. You want to see, when you have a big move, you want to see big volume behind the big move. That's when there's conviction behind it. 100% of the time, no. Like here's an example where volume spiked. Um, However, the stock was already very oversold, and the stock just didn't do much, even though the volumes fell. And that's because we really didn't have a good signal anywhere. The signal didn't really get good until mm, let's see. Well, I suppose here you got a decent signal, but you still have the money flow kind of moving in the wrong direction. Not a lot, but a little bit. So that's kind of one thing I really wanted to show you guys at the process that I go through. The next thing that I wanted to show you, this is probably a little bit, no, I don't want to label it as complicated or not complicated. So this is a software. I briefly showed it at one point, and I've had it for a while, but I recently spent a pretty decent sum of money upgrading it, like $2,000. And then I just subscribed another $1,000 add-on, which is going to give me the incredible ability to screen things. Most importantly, if you think about our indicators, let's pull this up. What do we look for? We look for one, uh, red or red crossing blue, either up or down. We look for confirmation, sharks going underwater or sharks coming out of the water. We look for money flow going in the direction of the trade, and we look for a stock that's not overbought or oversold when we enter, and then we look for a volume confirmation now that summer's over. Okay, that's a lot, right? And it's extremely time consuming to go through all that. So I just paid Metastock, their engineers, and they are writing a formula for me that has all of my indicators built in, and then I can just search. And so I wanted to show you what that looks like just using some other random indicator. So because this is going to really streamline what I do, and it's going to give you guys a lot better, more reliable signals, and I would say better in and out signals. Um, so let's see. Let's use this. So this PV filter This is a filter. This was a simpler formula that I created myself. I could do the easy formulas. My trade is a little over my head to create the formula because Metastock's not easy. But this was easy. This was, I wanted stock prices that were trading between 40 and $90. So I keep the price point down for those of you that have smaller accounts. And I wanted volume of the underlying security to have an average volume of over 1 million shares. That tends to keep us out of trouble, and it tends to keep the bid and ask spreads a little more narrow. Um, so I don't want that right now. So this is me telling the computer what I want to search. Now I can search everything on NASDAQ. I could search pink sheets. I could search ETFs only, etc. But so what we are searching is, and by the way, just looking at optionable stocks in this country, I think I think this is just the North America. There's almost 4,300 different optional stocks. So there's so much opportunity to miss great trades or jump into not so good trades because you just weren't getting enough data, and so the trade looks okay, so you take it. You shouldn't do that, but look, we're all humans. I'm certainly less so now that I've got you guys following me. I promise you that. Okay, so I search volume, and then you see all this stuff here. These are all different indicators, forecasters, things that I could use. So we'll just look at using forecaster, which is the money flow negative divergence. So that's telling us that the money flow is moving in the opposite direction of the security. And what that's telling us is there's going to be it's going to flip at some point. Would I trade just on that? Probably not, but it's not a bad place to start. And it's also not a bad place to run my own trades. So once we have my trades on here, uh, uh, we'll be able to explore that. So I hit the explore button. I click the toy that I want, and I click start expiration. And I don't know how long this will take just because I am really using a lot of bandwidth. Whoops, I want to get out of this one. Ah, it's too late. Okay, we'll let that run for a minute. And by the way, Chuck Hughes, you guys have heard me talk about him quite a bit. He's the guy that won 9 world championships for trading. Documented. He's made $9 million or something over the last 6 or 8 years. I'm not sure about that. Um, he costs about, I think, 2,400 a year, and he doesn't go monthly. Um, so sorry. Um, I paid him a lot of money, and he very rarely gives us a trade, and you're seeing why. We're running all optionable stocks in the U.S. against his filter, and this is telling us so far 384 out of 300, or now 409 out of 409 have been rejected. So virtually nothing fits his formula. And when they do fit his formula is quite a bit different than mine. And I'm certainly not saying mine is better, but emotionally, it's been harder for me to jump on his stocks because I prided myself on consistency of my own systems. So that's running. Looks like it's found one. This. I almost think this is an error because this one pops up a lot, and it's just too weird of a signal. Okay, so now we're running through the divergence. Did that already run it? Let's see here. Oh yeah, okay, good. So our MFI negative divergence run here has pulled up 4 candidates, and so we'll just open them. Look, these are pretty high volume stocks. The prices are all within where I told you. I'll tend to start with the lower price ones because that's easier on your budgets. We can open the chart, and I hope this is helpful, guys. Let me know because again, I just thought a lot of you knowing kind of what I'm doing, it could be very helpful. So actually, let's trade this indicator since we ran money flow and not on balance volume. And interesting. So you can already see stochastic starting to turn down. You can see the MACD. Is that one MACD? Yeah, MACD. The trigger line is starting to turn down. And I'm sure when we run the money flow, we'll see that turning down. So let's just take a quick look here. Oh yeah. So I got to put in MFI. It's hard to search on this because it goes alphabetically, but in so many different ways. And I can pull this down here, and I'm going to put it up here all by itself. Okay, so, very, very slight divergence here. Probably a little early for me to jump on going short on this guy, um, but certainly one to watch. And so what we see here is we've got my indicators laid on top of what he found. And then there's another kind of cool thing here where I can go to expert advisor and I can read. I don't know if there's a money flow indicator on expert advisor. We'll just look at a momentum indicator, and I can attach that to the chart, and then I can read the commentary, and this is telling us how they do it, and it's telling us the last signal they got was a sell. So that's just one out of, I don't know, 100 different expert advisors that you can run. So my signal will be here in the expert advisor, and so that'll help me for sure. Although I don't need anybody to tell me what my signal's telling me. So anyway, I hope that's helpful. And then one other thing I wanted to show you guys. This is probably the best part. Let's close this. I can also go and I can apply any template I want here. So there's a bunch of templates, and again, my template will show up in this list here. And my favorite guy is this guy. This guy is brilliant. In fact, I'm going to see him speak in LA in October. His model is the #1 selling add-on. It's the one I just bought in all of Metastock, and Metastock's huge. I don't know that I've even looked at this. Let's see. Okay, so yeah, this is his normal one. I could actually just push this button and gotten there. That's how popular it is. They put it right here. So what I bought from him is so much more than what you see here. It's got this incredible screening ability. But what you can see here is he tells you generally when the stock is bullish. He tells you generally when the stock is bearish. His upgraded model, it adds the colors of orange and red. And so you have some notification. So it might start off like a light blue, like, hey, get ready, jump in if you really want to be trigger happy. And then so blue is essentially telling you don't get out. And so get in, stay in. Now these red arrows, granted they're confusing, but what's told you is there was just a little bit of a downward pressure on the stock, but not enough to turn it orange. So you can see here if you entered here and exited here, you did well. If you went short here and exited here, you did well. If you entered here and exited here, you would have lost a little bit of money, and so on and so forth. So he's still showing this is bullish. And again, I don't react to any one person's information, and this is where you do get paralysis by analysis. Consistency is everything when you're trading. So anyway, just hope that helped you guys. And then any questions about any of that? And that was a mouthful. Okay, so the next thing that I wanted to show you was a let's see here. I'm trying to get this out of the way. So we talked about naked puts. I did a video on this, and I just thought it was worth maybe covering in case there's any questions, because I was doing some private one-on-ones with a few different people, and when I used this example, the light bulb went off so brightly, I realized, oh, wow, I don't think people are really understanding some of the very basic concepts. And that's on me. That means I just went too fast in teaching all this, and I make assumptions that certain things are clear, and they're often not. So let's go to, let's just do K. That was the naked put that I talked about this morning. So good. Again, we did naked put, so we want the stock to go up. Our naked put is all the way down at $60. And this is the way I want you to think. You first of all think about what's just like the most incredible trade I could ever do. And that would be a naked put that is so far below the money it's ridiculous. So let's look at the chart. Um, so we're down here, guys. So unless the stock falls below 60, I get to keep the entire premium that I sell. So if we mark this up here and go to the 60 line, boom, you see how powerful this is. Go back 2 years, nothing. Go back 3 years, nothing. Go back 5 years, a little something here 5 years ago. But even then, $58. And if you had any patience at all, and this is what my point was about dust, the position that's giving me a stomach ache, you realize that they turn against you, but they don't stay there. You can't find a time where anything stays above or below the Keltner line very long. And when you find good support, you know it's good support, okay? So I think I've made the argument that $60 is a pretty darn safe place to enter a naked put. Would you agree? Good. Okay. Nobody said anything, but okay. So now I'm going to go back. Oh, let's just get rid of this because it's confusing. We're only doing a naked put. We're going to sell it to open. I already did this, so I'm not going to do it. And I think I went out to December 21st. And yeah, there it is. I think I got filled at maybe 38 cents on this one. Um, Looks good, right? I mean, does anybody think that that $60 put is not a good trade? And again, I that's not a question to be antagonistic. That's a question to really want to dig deep because what that means is I haven't probably explained myself well enough, or you're seeing something I'm not. Either way would be good to hear. Um, so, okay, max gain of $40. Whoopee. But again, you buy 10 contracts, it's $400. Well, look at here. If you want to scare yourself, you would really scare yourself by looking at the max loss. And what the max loss is assuming is that I ended up with these shares, and I took a loss on the shares. And frankly, I don't know what it's assuming I moved these shares at. Because if I got the shares at $60 and I had, let's say, 100 of them, they'd have to go down. Well, they'd have to go down to zero. There you go. They're assuming a full loss. So this is shares go to zero, but you get to keep your premium. That's what that number is. Frankly, I just don't look at it, obviously. Okay, so now you don't have enough money, let's pretend, or you don't want to put enough money into your account. It's the same thing, really, to trade these naked options because your broker is going to make you have 20% of this number in your account. So that's $12 per share per share times 100 for a contract. You need $1,200 in your account to do just one contract at $40. It's an easy $40. It's a fast $40. but but if you only have $5,000, you could only do maybe 4 or 5 of these a month. Now you've only made, a couple $100 a month. Maybe not bad, to do a couple of them. But it's kind of my inner conflict with running this group is how much do I play to the $5,000 accounts and how much do I play to the $100,000 accounts? And my wife and daughter both suggested maybe this is going to work into an account size group. Maybe people with $50 to $100,000 accounts will attend certain classes and then so on and so forth. And that way I'm really giving my all to each group. Um, okay, so back to the story here. We like the $60 put. We just can't do it. We wish we could, but we can't. So how can we do this? The way we can do this is by adding a put to the other side. So right now we are short the $60 put. We love that trade. It pays 35 cents. And so we need to buy insurance. Think only about the buy side here as insurance. All you wanted was the sell side, but your broker's making you do the buy side for insurance. Or you're too scared to own the shares. That's a reasonable fear. It's not one that I have because I'd love to have Kellogg's at 60 bucks. I'd love that stock at 60 bucks. Um, so I'm in a no lose situation with my put. Okay, so let's buy some insurance. So the further away we can get from the money, let's see, sorry, let me get here. Okay, um, the closer we can get to the money, the further away we can get from, the price that we wanted to be, the 60, the cheaper the insurance gets. So here's the net outcome here. I I already liked this at 35 cents, right? Now I'm going to throw in an 8-cent insurance policy. Let's see if I can even buy a cheaper insurance policy. I don't care how cheap it is. Let's see, that would be, we got to go this way. There's a 5-cent insurance policy. How's that? Let's see if we can get a cheaper insurance policy. At some point, it gets too cheap and it doesn't trade. There's no bid on this one. So $47 would be the cheapest insurance policy I could do. Now, you'll notice what's happened here is my gain has gone up and my loss potential has gone up. But you have to forget about this because, again, this trade was about selling short the K contract at $60. That's what you want. This is what you have to do to protect yourself. And so you're only paying a nickel. So I will make $30 a contract here. I think this just went down. The stock must be going up. Yeah, it is. So I think I filled closer to 40. But we'll leave this number. I will get filled at 30. Sorry, I would make 30 if the stock stays above 60. Um, you would make wait, why isn't it taking the nickel out? Oh, sorry. I would make 35 cents if the stock stays above 60. You would make 30. It's the only difference. You had to spend a nickel on insurance because you didn't have enough capital in your account. Fine. So what? It's still a good trade for you unless you focus too much on this. And because in the beginning I talked to everybody about risk reward, blah blah blah, and it just confused a lot of people because I was talking about risk reward on naked options. So how is this max loss calculated? It is quite simply the difference between the two strike prices. That's what you could lose. Now, your broker would require more money in your account, and in this particular example, we got so cheap on the insurance policy, you would have to have 1,200 bucks in your account to cover this trade. So you're almost in the same boat as doing the naked call. So that's the dance that we have to do. You have to figure out. Okay, here's an example where at 50 now my insurance only costs 8 cents. Okay, it's 3 more cents. Who cares? But now I only need $700. That's almost half of what you needed otherwise. And by the way, your break even point at 59.62 is lower than my $60. So in some sense, you're even better off. Does that make sense? I know that's kind of was a long speech. Let me see. Questions. I have the KOR, but haven't been filled yet at a credit of 40. Looks like the market is at 35. Should I take that? Um, yes, I think I did Jackson. I did a market order this morning because the bid and ask was so narrow, and you're within a dime here. It's a little bit wide, but my guess is you're going to get filled somewhere around 32, 33. But again, make sure you've got the capital in your account. I probably got about 5 messages from people this morning saying, I did 4 contracts of K and I don't have any more money left in my account. What should I do? I was like, well, you shouldn't have done 5 contracts. Um, and again, I know that I've covered so many times what the requirements are on a naked option, but I also know that it doesn't stick always. So when in doubt, check it out first with me. 20% of the strike price is what you need in your account. So in this case, it's $1,200 per contract, minus the $33 you already got to put in your pocket. So it's really like $1,170 to do this naked trade. Does that help? So yeah, Jackson, I'd do a market. You got Phil. What price, Jackson? Rick, K put looks good by technicals for our learning. May I ask any concern in the retail sector, which appears fundamentally at risk with Amazon's continuing pressures? Um, so, Rick, that is an absolutely fantastic question. If we were buying and holding stock, that would be a thought process you want to go through. But when we're trading options and we're going to be in this for 3 or 4 weeks, we're not going to get moved by any kind of market demands. Now, clearly, the market could crash overall, the broader markets. That's going to pressure every stock. But in terms of this options position, I just don't see it. And clearly, if the market started crashing and you had any risk of this dropping below 60, you'd probably just exit it, and you wouldn't lose much. Okay, what other questions do we? Does that make sense, Rick? Okay, good. Um, Chris is asking me, this is a put spread. By the way, I want to be clear. I'm not advocating a trade here. I'm just showing you what could be done, and this might not be a bad trade. Um, so yeah, this is a put spread. We got two puts, and anytime you have the opposite side of a trade, you have a put spread. Now we could also have done, because this is a bullish put spread. I believe the stock is going to stay up. I don't think it's going to go up much, but I think it's going to stay well above 60. So that's what I love about options. I don't need it to go up. It could go down. Um, I could also have gone the other way, and I could do a call spread, which typically is what you'll do when you believe the stock is going to go. Um, you'd sell a call if you think the stock is going to go down. So in this case, it's kind of the same idea. First of all, do I believe the stock's going to fall below 60? Do I think the stock's going to stay above 60? I do. And then if I buy the other side of that, I want to get the cheapest insurance I can. Actually, I'm not going to start, because I'll start fiddling around with this thing. The next thing you know, I've used up all the time. You don't need to know the difference right now. This one's a put spread. My whole point here is you can switch this and make it a call spread. The difference is it'll become a debit trade versus a credit spread, a credit trade. And every once in a while, I will have to do them as a debit spread for various reasons. But when I can do a credit spread, I do. So this is a put spread, and it's a credit. You're welcome, Chris. Um, okay, so I don't know. Well, I guess we can run through the positions real quick. Yeah, let's do that if you guys have time. Close all these up so it's not as overwhelming. Or some of them will have to open back up, but okay. So if we wander over to our P&L section, we can see big. That was the short position we took this morning. Um, sorry, the naked put, that's up. No point looking at the stock price right now on that one. I don't think very many people got into it. Dust is still just not moving in our favor. It's off another 15 bucks today. But as I showed you, if you guys didn't see what I posted on Telegram, take a look at it, please, because I showed you. Well, I'm just gonna open it up. It's probably quicker for me to do this than it is for you to go back and read the post. Let's see here. Let's go to 6-month look. And okay, so yep, it's above the support. Sorry, resistance. It's above the Keltner channel. It is a screaming buy signal, and there's lots of reasons we should probably be nervous. All that said, what we have to remember is this position is on the books until October 16th. And all we needed to do is to fall back down below $41, back down to here. Can anybody look at this and really tell me with any confidence that that's not going to drop back down here? And you just go back in the chart and make yourself feel better, and just look at times where it's spiked and watch when it's come back down over and over and over. It plays off the Keltner channel and then it falls. In this case, it bounced well above the Keltner channel to 43, and then it proceeded to fall to 36. And so if this takes 6 weeks to happen, that's fine. We're absolutely good. But it's going to happen. I feel very confident about that. And I felt good that 90% of you on the call yesterday, well, let's say 100% of you that answered me said they get it, they'd rather ride it out, and they believe that October 16th is a long time away, not to worry about. So the thing that I added here, again, was just looking at the volume, and I was starting to see a volume divergence here, which is good to see. So let me put that up. Now, granted, the stock market still has some time to trade, so volume's not 100% cast yet, but it's getting there. But generally speaking, you see here, guys, there's a downward trend on the volume. I mean, it started here and it's literally just working its way down. It was definitely higher than this point yesterday at this time. So that's important. It's really important because what it says is even though there is some money still flowing into the stock, even though the stock's still not overbought, um, money starting to volume starting to trickle. So that's kind of a bullish sign for us, and we just gotta wait. Okay. Next is go down the list here. Gold. Gold is up $10. It's not doing much. I won't open the chart. It's been very quiet. There is a slight temptation I have to exit this position. Oh shoot! I just can't resist opening these charts. Sorry. When I start talking about something, I just feel like if you can't see it, it's hard to conceptualize what I'm talking about. Okay, GLD. Okay, so gold, it had more up volume than down volume yesterday. The bar is green. It is getting a little bit overbought, but money is kind of just slowly flowing into it, and we still have a buy sign. What I'm a little bit concerned about is it is flattening out, and if today's volume isn't up around yesterday's, up volume, that is. We don't want a lot of down volume. We want good volume when it's up. We want low volume when it's down, when we're bullish. Then we might just exit this thing because it's been hanging around for a while and it's not quite behaving. Doesn't mean it won't, but we're getting more and more positions going here. Okay, next. I'm going to go a little faster now. Okay, this is my naked option on GPS. Polex is a new one for us. It's down $18. Again, it's too new to even think about or talk about. IGV, overall, I'm up 150. Let's see what the naked portion's doing. The naked portion is up $43. 44, the eternally just below $45 profit stock. We're going to get taken out of this anytime with a $45 profit. Most of us have our limit orders in good to cancel with a $6 credit. That gets us out with a nice profit. IWM, I'm up $60 overall, but I think a good part of that is my nakeds. So let's just look at these four here. You know what? I thought this did the math for me, but yeah, okay. So we're up 10 on one side, and we're down 38 on the other. So we're down 28. IWM has been improving. That's nice. And then K, that's my naked option. It is up 6. And then our newest option, Cimarex, is up $9. And so that's coming out of the gate the way we would hope. So overall, I feel like we're in pretty good shape. I feel like IWMs continue to move our way. I feel like IGV is moving our way. Gold is pretty flat, and dust is a knee knocker. All right, any other questions? Let's see here. I'm loving all these questions today, guys. Matthew, my E-Trade account shows K as a long put, and not sure if that's correct or how it's different from IGV that shows a naked put. Ah, what's the difference between long and naked as the trades seem to be the same structure? So, Matthew, are you saying on your K that you have just one side of it? That you just you don't have two sides of that trade? Because if it's showing long, you went the wrong direction. You bought to open instead of sold to open. So check that out. If you bought to open a put, you're betting that stock's going to go down, and I don't know. You might be okay with that thing for a little while if your strike's as far away as I think it is, because when strike's that far, the stock's trading so far away either way. Because a lot of times I expect my naked puts to be down for a long time because I didn't concern myself as much with being precise with the directional call. I just wanted to get really far away from the money because I know they're going to go up and they're going to go down. So, Matthew, you still there? Okay. So, Matthew, if you're still there, make sure that you sold to open and not bought to open. Otherwise, you're in the wrong side of this. And if IGV is shows as a naked put, um, yeah, that's the difference. So the difference is long is you own it, and you're betting on, if it's a put, long, you own it, and you're betting on the stock going down. It's a bearish play. Naked, by the way, you could be naked long or naked short. So naked doesn't tell me much. So long, naked, it sounds nasty. Long and naked is bearish if it's a put, um, if you bought it. And if you sold it, you're short and naked, and that's bearish. Okay. Yeah, I think oh, there he is. Okay, you'll double check. Let me know. Yeah, let me know if you need help with that. Okay. Um, yeah. Mark said long and naked. That's what she said. I'm gonna be really transparent here, Mark. She's never said that to me ever. Unfortunately, it's my heritage. It's my genes. All right. I think that's it, guys. Anything else? Oh, and by the way, we have the group that starts in September 18th. Just so you know what I'm doing there is, you guys are getting super smart, and on the 18th, you will have officially graduated from the rookie class, and you'll be in the next kind of the next level, and then the rookies will come in and fill the September 18th slot because it makes no sense for me to have people all in the same place, and I feel like I can take on new people in the next couple of weeks because this is getting easier and easier. As you know, it was really tough on me the first couple of weeks, but it's getting super easy. And I did make the second class much smaller than the first class because the first class was a little overwhelming for me. Um, but oh yeah, my point. There's going to be some ladies in that class. This group is 100% men, and the next group is like all of a sudden a bunch of women are jumping in. So I can't be making my long and naked tracks. All right, we'll close up, guys. Thanks a lot. Reach out to me anytime you have questions. And Mark, you can and you should switch groups um, because I think you came in really late. Um, so, oh, maybe you came in early. I can't. I know probably there's probably 10 or 15 people. I sent a note yesterday on Facebook and on or this morning on Facebook and on Telegram. There are a lot of people right now that are asking me questions, and I'm like, where the hell is that coming from? And then I realized that they're new. They weren't in on round one. So anybody that's on this call that was not here from day one and is feeling even 5% lost, jump in on the beginner classes. And there's nothing saying that. Oh, Mark, you just wanted to be with all the women. Okay, that's funny. Um, you can always jump back and forth if you're feeling like you need to learn more. Okay, Matthew, I did buy to open instead of sell to open on K. Crap. Okay, how many contracts did you do? If the position is kind of, you're probably, if I'm up $6 or $10, you're probably down $6 or $10. I would flop that over. That's what I would do because I'd like to have you going in the same direction as me, so we're not betting against each other. Okay, thanks, guys. I'm here if you need me. Take care. Bye.